Markets this morning expected to open lower. Stocks soared after the presidential election, of course, but the Trump rally has been slowing down this year, leaving investors looking to Trump policy before they make their next move. Joining me right now is CalPERS Chief Investment Officer Ted Eliopoulos, joining us right now. And Ted, it's great to have you on the show today.
Oh, Maria,
thank you so much for joining us.
Thank you for having me. It's so nice to be here.
You know, it's important to check in with you because you are overseeing such a massive amount of capital, $306 billion. Is that right? The AUM at CalPERS right now?
That's exactly right.
How are you allocating that, and has it changed with the new administration coming in? Well,
we're allocating it according to our long-term strategic asset allocation, of course, and we're heavily weighted to equities in our strategic allocation. And really, going into this U.S. election, we position the portfolio to take into account both the hopes for equity allocations in the future, but also the risks of this election. Post-election, it's really the same story. There is much hope and optimism for growth in the U.S. and positioning of portfolios to take advantage of that growth. CalPERS benefited immensely from the run-up in the equity markets over the last month and a half, for sure. Now the question really is, as you know, what happens in the future?
Yeah, I mean, I think this market was really rallying on the idea that we would see corporate tax reform. Obviously, a 15% corporate tax rate or a 20% corporate tax rate would do a lot for corporate earnings, yes?
Yes, it would, as well as regulatory reform.
Right.
Both would be very productive for growth in the U.S. and translate to better earnings, better equity returns for the future. But there are also some risks to take into account. One is what impact on inflation. We have been in a very low inflationary environment, and what the impact of these policies could be on inflation is something to keep an eye on.
How do you prepare yourself as an asset manager for that? I mean, when you look at inflation perhaps on the horizon, does that change your assessment of what to do with bonds versus stocks?
Well, it's a very difficult spot for investors right now because you have to prepare for some divergent outcomes. Are we going to have an inflationary environment going forward or continue to have a deflationary environment? And there's no one portfolio that's going to be maximized in each of those environments. So for CalPERS, we have such a dominant equity position in our portfolio, almost 48% of the portfolio today. We have bought some inflation-protected securities and repositioned the portfolio as well as commodities in the run-up to the election.
In terms of 48% in equities, is that through index funds, ETFs, or specific names?
We're a direct investor in the global index of stocks, so we are predominantly an index investor with enhancements that we do mostly internally with our internal global equity.
What are the enhancements? Tell us about that, because today you can buy an index with whatever combination you want, right?
That's right. Yeah. So we have several factors we look at. It could be momentum, value, quality, low volatility, maximum diversification. They're all risk factors that allow us to tilt the portfolio slightly in directions that we see benefit.
When you look at the overall areas that you have to allocate capital, we've talked in the past about hedge funds, and you've been vocal about, look, the fees are something to watch, and it's not as, you know, a profitable thing anymore, as well as private equity. You're developing plans to shift somewhat $30 billion in terms of private equity away from, what are you doing in terms of shifting?
Sure, yeah.
You're going to move in-house as pensions cut fees.
Yeah, we're trying to bring as much in-house as we can. We have over 70% of our portfolio we manage internally. Most of that is in our public asset classes. We have added a new allocation to actually opportunistic credit, to new credit strategies, structured credit, private debt. We think that's an opportunity for the future. In that we have that talent in-house. We have active fixed income managers within our staff that are able to execute those strategies with confidence. In the private markets, it's a much tougher assessment whether you can bring in-house those strategies. And we're not sure right now on the private equity side that we could effectuate a strategy to compete with the external managers that are our partners that have done extraordinarily well for us over time. The fees are high, but the returns and the performance net of all those fees have been quite robust and persistent for over 20 years for us now. So it is a very important calculus to try and adjust the external-internal model internally.
Do you have any concern that we're not going to see the tax cuts and the rollback of regulations instituted this year, and would that dictate a change in the way you invest in all those equities?
Well, we'll stay heavily invested in equities for the long term. We're a long-term investor. We'll be watching quite closely over the next 6 months to see how difficult and how swift these policy changes may come.
Because people are wondering if, in fact, you know, there's money for this. I mean, yeah, they want it revenue neutral. And one of the president's underlings, Mick Mulvaney, says, look, we got to take a chopping block to the entitlements. As the guy who's running the largest pension fund, CalPERS, out there in the country, what's your take on cutting entitlements?
Well, you know, these are promises that have been made to ordinary pensioners. That's our view. For CalPERS, our duty is to our pensioners, and we have very hardworking policemen, firemen, firewomen, policewomen. You have to keep those promises. So the key is to make sure you price them and you save for them in order to keep those promises for the long term.
Ted, it's great to have you on the show today.
Thank you for having me.
Thank you so much.
Really
Ted
appreciate it.
Eliopoulos is the Chief Investment Officer of CalPERS.